Okay, good afternoon, guys. Welcome to another live trading session with me, Steve Ruffley. So we're going to go over the Bank of England today. I don't really think a lot's going to change, to be honest, today from this meeting. But what I have proved over the last few sessions that I've done is that we're coming out of the growth cycle and moving to that inflation cycle. So the markets are much more volatile and moving a lot more based upon what's being said from the Fed, the ECB, and the Bank of England than they are from things like the non-farm payroll. Obviously, the non-farm payroll was out of line on Friday, but during the bank holiday, we didn't see much of a reaction. In the grander schemes, grander kind of scheme of things, a 267 and 126 headline should have sent the market down about 3 points, but it didn't. And what we saw is the days afterwards, we basically retraced the entire down move in a day and went on to rally. So all these things really are very kind of, from a trader's perspective, and somebody who's done these things for a long time, are very indicative of the market changing its opinion of what's important. So it's not about the growth anymore. We know that growth is as good as we can make it in the real world. Okay, the EU's doing whatever it's doing. It's back to quantitative easing, negative deposit rates. Whatever happens in the EU, nothing good's going to come from it. Okay? Happening in the real world, and I'm talking about the UK and the US, is that we're trying to normalise the economy. So we know we've had good job growth for the last 6 months. We know that people are more secure and spending more. If that's sustainable, I don't really know. But what the governments are trying to do is normalise the economy and get the markets back to some sort of semblance where savers are rewarded, where the markets are more predictable and more stable. And that's why we're not really focusing on these growth figures right now. It's all about when we're going to move on interest rates. I was a little bit wrong on this, to be honest. I'll hold my hand up. I thought the Bank of England would move on interest rates first of all the G8, and it looks like it's the US. I think it's only with the timing of the election. Interest rates will still go up in my mind in the UK this year, and it's not going to be as aggressive. It's looking like from what the Fed said. But what have the Fed told us? Janet Yellen's told us absolutely nothing. When forward guidance is concerned, she's rubbish. And we're all being treated like idiots. We all know these things are cycles. Interest rates are going to go up. They're going to stay high and go up for the next 10 years, maybe the next 20 years. Okay, so all the mums and dads, all the clever little people that bought investment properties, on their pathetic little pensions, are all screwed. Okay, so it doesn't really matter what happens in the future. The shift of money, the balance of power is all going to change. People are going to get out of property. Property's going to correct. All these things are cyclical, and it's all going to be based around interest rates. It's going to happen in the US. It's going to happen in the UK. Nothing is more certain in my mind. So what we're looking at today is what the Bank of England are going to tell us. Nothing. Okay, so the interest rates are not going to change today, but it's not about that. All what we're looking for is that coded message, that underlying fundamental sentiment that makes us think something could happen. Okay, so the Bank of England and Mark Carney, they're just sat there, aren't they, twiddling their thumbs? These guys are literally, God, it's hard not to get annoyed about these things. It's pathetic. All these things are pathetic. It's boring. It's so boring. It's tedious. It makes it very hard for me to turn up and do these presentations because I wonder what the world will think of us in the next kind of 50 years, the next 100 years, when they look back at this period in time where we were just so frightened of everything. We've created this world where people are protected by the property, the amount of money they have, and they've built it on nothing. Nothing. And it's in front of our very eyes, and there's nothing anybody can do about it. Okay, that's why I don't have lots of investment properties. That's why all my money is sat in a bank. Okay, earning no interest. I'm like Scrooge McDuck. I could swim around in my money, but where else am I going to put it? Yeah, nowhere. So doesn't matter. It's not about that today. What it's about is trading the Bank of England, understanding if anything is going to be said that can move the markets. So before I start, as always, the risk warning. Remember that spread betting and CFD trading carry high risk or capital, resulting in losses that exceed your initial deposit. They might be suitable for everyone, so please ensure you fully understand the risks involved. The information and is provided here under no circumstances to consider an offer to invest. Nothing here should pursue investment advice. The information provided is to be accurate, it's produced. Education only. Content of the webinar is posted opinion of the moderator on trade.com. The content is not constitute financial investment tax advice. And trade.com is not accept any liability of the content consumed during the session. So, what am I going to do? I'm going to make some money, like I always do. Live charting analysis. I'll go over what the market's doing right now. Multiple time frame trading. Yeah, we'll go over what happened in the past to predict the future. Fundamental analysis, why we're here today. Live real money trades. Only trade real money. Only make money. That's what I do. I'm not interested about being right. I'm interested about making money. That's why presentations are different, okay? I'm not interested in being right. When I'm quoting Bloomberg, Financial Times, Reuters, whatever. I'm doing my job. I'm trying to be right. Okay, predicted gold was going to come down, the FTSE was going to go up. What more do you want? What I'm trying to do today is show you can look at the markets right now and try and make some money. Okay, so we've got the DAX looking very, very strong again. We've got the SMI looking too strong, in my opinion. Got the UK again. Well, that big sell-off that we saw, automatically, again, we hit any low point and we buy. What I've been telling you, okay? I've been telling you for the last year that you buy low points in the stocks. Every time we come down and hit a significant point and don't close towards the bottom, we go up, 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 okay? That's happened in the past here, 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 okay? And that's just dailies. Go to the weeklies, same scenario, here, 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 here. Every time we don't close towards the bottom of a daily, weekly, monthly candle, we go back up, okay? I can't make it any simpler for you. Until we hit the absolute high, which I don't know what that's going to be. It will come probably, later in the year when interest rates start to rise. But every time we see a low wick, the market then continues to go up, okay? I cannot make it any clearer than that. So when you look at the hourlies, what do? Yeah, you buy low, sell high. Pretty much as simple as that. The FTSE gets to 7,300 at some point before summer. And then it goes down to 6,500, maybe 6,300. Okay, you'd have to pay me millions of pounds to get this kind of information. You get it on FX Street for free. Still don't know why I do it. I don't know. Must just be a good person, mustn't I? So that's the FTSE. What else have we got? S&P holding above 2,000, got to go higher. Euro's finished, as I've said this 18 months ago. Okay, we've seen a little bit of weekly buying already getting destroyed. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 selling months. Okay, we were nearly going to close green. Not going to happen. Euro's finished. It's getting to parity. It's getting to 1.0. It is done. Okay, look at your weeklies. Profit's been taken. Bottom of the range. We go down. Look at your dailies. What's keeping that up? Nothing. So we hit them previous lows down at 1.04623. Market then is destroyed. Okay, 1.0 and below. Nothing is bringing that euro back. So, other things of interest, I still think the dollar's going to remain strong, the world's currency. Again, we can see this from the monthly chart. I mean, we're above these. We've got these highs to break yet. So I still think, 130, 138 is achievable back to these previous highs. And once you spot a trend, it's already too late. So the majority of institutional were long here, continued long. So we've seen some profit taken on the monthlies. So I think that the dollar's only going to strengthen. We've seen some sell signals down here. But to be honest, we're not taking the fundamentals into account. And I think with the oil prices, with the problems in Europe, the problems in the world in general, I think we're going to break a lot higher before we do see this retracement on the longer term. So go back to your weeklies, kind of consolidating towards the top of the range. It's just not a chart pattern that says sell. It just isn't. Okay, found support. It's going higher certainly before it goes lower. Dailies pretty much the same. Okay, if we're going to move lower in the dollar yen by now, we'd have done it. Every time we hit them low points, we go higher. Low points have been hit, so we're going to go higher. Simple as that. Okay, don't try and overcomplicate your technical analysis. So realistically, stocks are going to carry on a bid. I'm surprised gold hasn't really come down more aggressively. I said the gap would be closed after the non-farm payrolls. I've made a bit of money, probably 2 or 3 grand over the last week, just selling gold, nothing amazing. But the gap's been closed, and that was always going to happen. We gapped up higher to where I said after the non-farm payroll, just based upon the data. But as the S&P, the FTSE and the DAX all retraced them gains in one day, then gold was always going to close that gap and move lower. So we're still pretty high in gold for me. I would say we still need to get back to 180, 170 before we start to break aggressively down. Gold's going down, okay? So it doesn't matter when it is, how long it's going to happen. It's going down. There's not enough fear or greed to push gold back up. Hedge funds are out of gold. There's no cash for gold adverts on TV anymore. Well, there's no physical shortage of gold. There's a pathetic article by Bloomberg about 2 or 3 weeks ago saying that there's only 20 years of mineable gold. What does that matter? It doesn't matter an iota. There's more gold in banks and vaults than there is in the ground. So what does it matter? Gold is given a price by people in a room, in an office. Yeah, it's set by people. Okay, there's not enough people out there buying gold, sticking it under the bed in gold bars for it to ever get back to 1800. Gold's going to hit $1,000 and be obliterated. I'm sure it'll probably level out about $1,200 over the next 10 years, but it's never getting back to 1900. Anyone thinks it is an idiot. All right, guys. Any questions? Any thoughts? Anything you'd like to ask? Cable. Do we have a view? Yeah, of course I've got a view on cable. Now I was wrong. Okay, I was wrong about cable. Cable I thought was going to rebound and be back at 1.55, maybe 1.62. I was wrong. Okay, so I thought the Bank of England were going to be sensible, move on interest rates before the rest of the G8 because of the housing boom and the housing troubles in London. Okay, the average person has to now raise £70,000 to be able to afford a house in London. Is that going to happen? No. Okay, so in 20 years' time, when all the mums and dads die and that we get the money, I get the money, I'm going to inherit about 10 houses. What am I going to do? I'm going to sell it. Okay, because I'm rich enough. I've got my own money. Okay, so what do I need with my parents' money? Nothing. Okay, and that's going to happen all over the country. £1.4 trillion is tied up in property by people that didn't really know what they were doing and have just got that money sat there. Okay, so when the kids get it, they're going to sell it. Simple as that. So what's going to happen to the pound? Well, interesting. I think it's going to bounce at some point, but clearly we had every opportunity to bounce here, and we haven't. So the fact that the Fed are going to move on rates before the UK is telling. Okay, so we're going to see continued weakness and probably break these lows in the pound before we go back up. So what we've seen is on the monthly, very much like the euro, 1, 2, 3, 4, 5, 6, 7 months of selling, a little bit of institutional profit taking, then we retraced all them gains and back down lower. So unfortunately, the pound goes lower before it goes higher. Realistically, we get down to 1.34933, and we're going to see a bounce at some point, but I'm not happy to buy down at these levels here that we see, that we're currently trading. I'd have to be buying down at these lows, okay? Now, I don't hold long-term positions. I just make money intraday. So when you look at the weeklies, again, we're holding towards the bottom of this range. Market's going down. Dailies, same scenario. Okay, take a Fibonacci, nice and simple. We're not back to that 50%. Yeah, didn't get back. We tried it once here. We're holding below the 38.2. So all the technicals, all the fundamentals are screaming. We break these lows and go down. Where it stops, I don't really know. All you can go back to is the previous levels in the chart. Previous lows at 1.34933. What's below that? Don't know. No idea. There will be a point where you buy the pound and you have to hold it for a long term for it to get back because it will strengthen. Because it doesn't matter what government gets in power, they're going to have to do something about interest rates. They're going to bring people into the pound. It's as simple as that. So I would say realistically, I would dip buy in the pound any significant lows, but only short term because the overall trend is down. So when you see, again, nice hourly rejection points like this, try and make yourself some money. Try and make yourself 45 ticks, and that'd be it. To be honest, because it's going to go down in the long term. And that's all because people know interest rates are going to move in the US before they move in the UK. That's the only reason why the dollar's strengthening. Simple as that. So we're just going to wait 2 minutes now for this Bank of England announcement. Very much when I traded the Fed moved quite a lot, made £300 live in front of your very eyes. Not going to change the world. It's only a couple of bottles of champagne for Steve. But again, it's still money. What we're going to do today is trade any kind of movement from a purely technical manner. I'm not interested in what the Bank of England are going to say. There'll be no real forward guidance. So any slight comment, anything vaguely interesting, I will just trade the markets technically. That's all we're looking to do today. Try and make some money. Not trying to make more than 20, 30 ticks, to be perfectly honest. So just 2 minutes before the figure. So what we're expecting is nothing, not unchanged. But that's, again, we're just looking for any movement, any quick movement in any of these 8 markets that I'm looking at. Okay, so just a minute now, guys. We're expecting unchanged. We're not really expecting anything major to be said, but if something does happen, again, I'm just going to trade the movement. So gold's taking a bit of a bid. Got some good levels to sell in gold here at 1205.99. Again, indices looking strong. Gold's looking strong. Doesn't make a lot of sense, the markets right now. Dollar's looking weak. Five seconds. Unchanged. Okay. So unchanged. Let's just see if there's any movement coming out of the market, if there's anything said, if there's anything over the wires, any kind of, opinions being expressed. Okay, just going back to some of your questions, guys. What do you think the IMF report April 16th will be important on the pound? No. Could you repeat the level bounce for the cable? Well, I mean, just go onto your charts. Just go back to the monthlies. The low point in the charts is here. I mean, I don't think we'll get to these lows, to be honest. I think probably we'll break 142 for a small amount of time, maybe trade down to 140. But realistically, I don't think we can get down to 1.34. I think the market's just too oversold. The economy in the UK is still strong. There is doubt about the election and what's going to happen. But essentially, where would you want to live right now? Would you want to live in France? Not a chance. Live in Spain? No. Okay. Rich people, 1%ers want to live in the UK unless Labour get in. Okay. So these low points, we're not going to get much below 140, okay, in the pound. Look to dip buy, but look for that move to be extended, okay? 6-7 months of selling, bit of profit taking, 1, 2, 3 months to get down to these lower levels, then we're going back up. So it's dip buying in the future for the for cable. So a little bit of strength in gold, nothing major to be honest. A little bit of strength in all the main indices. We're trading towards the top. I'd say the SMI is one to look out for. We're very high towards these this 9.3, 9.5 level. And again, if I show you what I'm talking about, we saw this. The weeklies are a lot better. We see that one big massive weekly drop when the Swiss moved their peg from the euro. Then we've seen 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks of buying to make new highs, profit taking. So we're going higher. So again, we look for short-term buys, but also we're going to have to correct at some point in the SMI. I mean, that's a major amount of of swing. We saw the market went down, 15,000. Is that 15,000? 15,000. 1,500 ticks. Okay, in a very short space of time, and then it's gradually got back up. So, we're looking that the market is going to make a new high, but it's not going to hold on to them for that long. It's gone down and up too quickly, in my opinion. So keep an eye on the SMI. Maybe the dailies will give us a clue that we break up a little bit higher, overextend. Maybe head towards 10,000. But I'll be selling, any highs in the SMI, significant highs, because we are due to come back down. So a little bit of a non-event, I guess, today. The Bank of England is always a tough one. The Fed is much more volatile and moved a lot more than the non-farm payrolls, and that's because we've been told by Janet Yellen and co. that we're going to move an interest rate, but it's not going to be as aggressive as we thought. We're going to move until Mark Carney or the Bank of England say that we're going to move an interest rate, and it's not they're going to say it. They're going to give us some clue by the tone of language and what they say, what they do. And, it's down to us to kind of try and interpret that. Interest rates are coming. Okay, people have mortgages for 25, 30, 35 years these days. So it doesn't really matter what happens in the short term. It's all about the long term. Interest rates were going to go up and they're going to remain high for 10, 15 years. There's nothing else it can do. So all this free money eventually is going to go out of the market. People are going to get out of the stock market to put the money back in cash. That's just the way these things work. It's not Steve Ruffley telling you. It's the world. It's history telling you. So just get on board with it. Well, there's no change. What do we think the market's going to do? Well, the market's going to continue in the trend. Okay, so it looks like the indices are remaining fairly strong. I'd expect the FTSE to probably hit 7,000 today. I'd expect the S&P to get to these upper levels around about 2088, and then I expect to sell a high in gold because there's no reason for gold to go up today. So that's what I expect. The Bank of England unchanged is not out of anyone's expectations. So are people going to buy the pound on the back of that? Are people going to sell the pound on the back of that? No, I don't really care. Nothing's really going to happen. So I'm going to stay outside of the pound today. I don't see any value. Where I see value is selling some highs in the Swiss, or selling some highs in gold, or buying some lows in the indices. Okay, I didn't buy any lows in the indices this morning. So, I'm going to buy them in the afternoon? Probably not. So today is a bit of a non-event. If I don't see any edge, I'm not going to trade it. It's as simple as that. I'm not here to be right. I'm here to make money. So I've made about £9,000 in the last 100 days. So again, not great, not amazing, not going to change my world, but it goes to show that I'm getting in the markets at the right time. I'm getting in the right kind of data events like the Fed, the non-farm payroll, the key levels, and just making money when it's right. Okay, that's what I'm trying to prove to you, that if you follow my teaching, you follow my signals, my whatever, you can make some money. I started with a £5,000 account. anybody who's serious about trading should be able to fund a £5,000 account. If you can't, you're not a real trader. Go and do something else. Go down the bookies, play the machines, have a punt. Okay? If you put £5,000 in an account, you can be disciplined to control yourself, follow the fundamentals and technicals. You can make money. Okay? That's all I'm ever trying to prove. To be honest, this is all really just to back up the book. Okay? This book has been an absolute pain in the arse to write. It's took me far too long to write. I'm not a writer, okay? But I've got to a point now where it's a good book and it's going to go out. But the missing ingredient was I was telling you about things to do and why you should do it. But again, because you can't see what I do, why would you buy my book? So what I've done is taken a £5,000 account to £12,633 in 100 days. So the whole point of the book is if you read it, if you get it, you too can make some money. And I'm not just saying you can make some money. I've proved it with live trades over 100 days. Okay, so that's really why I've been trading a lot more actively with, again, a relatively small account. I manage money for people. I have loads of money that I'm trading, okay? But I did it from a perspective of a retail trader. Started with £5,000, yeah, almost, 160% up. Anyone can do it if you follow a structured method way of learning, okay? So this is the only real time I've ever tried to sell anything, to be honest. And not that I'm trying to sell the book today. It's not even out, okay? But I'm trying to say if you follow my 80-20 rule, fundamentals, technicals, you're going to have a better idea of the markets. And if you just keep coming to my free education, it's all free, yeah, you're going to learn something. And if you don't, what have you really lost, okay? So in my opinion, what I'm saying right now is there's no edge in the markets. The sun's out, go and do something else. Look for the markets to be oversold. Look for the markets to be overbought. Get involved in value, okay? So I could have been involved in the pound yesterday, okay? Red means sell. Markets were high, red lines, buy them back at green. That's how simple I'm trying to make trading, yeah? Sell it when it's high, buy back when it's low. It's not about interesting, listening to people that talk about how banks trade. There's nobody on FX Street knows how a bank really trades. Yeah? There's not. They don't exist. They're just making things up to get people on webinars. I'm here today to tell you that I've made money over the last 100 days doing technical and fundamental trades. So if you follow what I do, you've got a chance of learning. Okay. So what we're looking for in these markets right now is value. I don't see any value anywhere at all. So I'm not going to trade. Maybe if we get to these upper levels in the SMI, I might sell some highs. Maybe if we start to break above 7,000 in the FTSE, I'm going to sell. And really, I should be buying with the trend. I should be buying the stocks, but I didn't buy them early enough in the day, so I'm not interested. I'd rather sell into the highs for less amounts of money and less amounts of ticks. I'm not interested about being right. I'm interested about making money. So I've missed the move in the morning. I don't really want to be buying the indices now because I've missed them moves. What I want to be doing is seeing 1, 2, 3, 4, 5, 6 hourly candles in the S&P green, and waiting for that red candle. Okay, so selling towards these upper levels and just making 20, 30, 40, 50 ticks. I trade £50 a point. Okay, so you don't need many ticks to make some money. So what I'm looking for is value. Although the market could easily get back to 207.830, get to 209.33, I'm not interested in buying it. Okay, I'm interested in being in the market for a low amount of time, taking a low amount of pain, yeah, and getting some value. So I know the markets could go up, and right now I should sit on the FTSE, S&P, because it's probably going to go up and buy it, but I'd be happier because I've missed that morning move, yeah, letting the US Open, push it up higher, selling the highs. That's what I do. I make money from intraday trading. I'm not interested particularly about being right. How do I see the election in the UK affecting the pound? Well, no matter what happens, if we get Labour as majority and coalition, the world's ended. It's finished, doomed. If we get the Conservative in, the NHS, pensions, benefits are finished. Really, there's no win-win scenario, to be honest. There's nothing good going to come out of the elections. Both parties are deluded. Both parties have no real idea how the real world works, and they're both outdated. So really, we're going to head into a housing market crash. We're going to head into nothing good. Nothing good over the next 5 years will happen in the UK. So although I'm expecting to see a rebound in the pound, and it will come because, the UK, although will fall into disarray and disillusionment, it's still a better place to live than India, than China, than Japan. So money markets are going to push the pound back up. But I don't really think the quality of life in England is going to get much better over the next 5, 10, 15 years, to be honest. That's why I don't live there. So really, what I'm going to say for the pound is it's got further to fall, but just purely on an economic and technical basis, we're going to see a rebound in the pound. But I think living standards in the UK are going to continue to fall, and this gap between the rich and the poor will get to a breaking point, and something major will happen. What that will be, I don't know. So, like I said, I mean, it's just purely from looking at the money markets. The election not going to have any real effect, to be honest, on the pound. It's going to continue to go down in the short, medium term. We're going to see a technical bounce, and it's going to go back up. The elections are really fairly arbitrary. I mean, what's the difference between the Conservatives and Labour these days? Not a great deal, to be honest. They both promise things that they can't back up. The Conservatives are going to be much more aggressive on cutting the debt down and basically squeezing benefits in the NHS. Labour have promised to fix all that. How are Labour going to do it? Basically, we're in this mess because of Tony Blair. Yeah? Tony Blair, one of the most evil men on the planet. Simple as, really. He destroyed the underlying work ethic, the underlying reason for people to be British, to be proud of being British, and left us in a complete mess. So, to be honest, if Labour gets in, the pound will probably fall a little bit more aggressively if the Conservatives get in. But again, I think everyone's priced this stuff in now. The world's due for a major correction, another credit crunch, and it's coming. That's why we recapitalised the banks. Sorry to be the purveyor of doom, but we're all to blame for this. We've all borrowed too much. We all expect too much from life, and we're all going to have to pay for it. So that's as simple as that, really, guys. So I would say the pound drops, but purely through to the supply and demand of the money markets, the pound will drop and then go back up. I'm expecting by the end of the year the pound to be back at 153, maybe 160. Okay, it's got plenty of room on the upside to go. What indicator do you use under there on the market? This is my own indicator. It's my indicator. It's something I had some clever boffins make for me. Anything else, guys? Anything else you'd like to ask? But not a damp squib. We're expecting unchanged in the markets. But as I said, the Fed was unchanged as well, but we saw much more volatility than a non-farm payroll based upon what the forward guidance was likely to be and the comments. So we have that potential to happen in the UK. But unfortunately, the Bank of England is not going to provide that until after the election because their hands are tied. So realistically, I see more strength in the markets, and I would be selling some highs in the SMI. That's my main focus right now because you can see, okay, the FTSE here is kind of saying grey area, don't buy it or sell it, but the trend is up. The S&P is saying to buy, so buy it, but the SMI is looking to get to these oversold regions and upper levels up here. So let the SMI spike up and sell high. That's the only value I see in the markets right now is in the SMI. Everything else I just stay away from and just wait for another opportunity, be it fundamental or technical. That's it. Go and enjoy the sunshine, guys. Go and do something. Nothing's happening, for me in the markets that I can credibly put an opinion on in the short term. So I will be staying out today. When's the book going to be out? It's going to be out probably in summertime. I'm on the third or fourth edit now. I've kind of lost count. A lot of work's gone into this, guys. A lot of work. So when it comes out, do spend a bit of time reading it. It's all for my own experience. It's all for my own money. Unlike other people on FX Street, they just talk about this stuff. I do it day in, day out. I'm up 160% over the last 100 days. I'm the real deal. I'm it. It's simple as that. I can be arrogant because I've done 1,000 webinars. I've traded the markets for 14 years. I live in a house with a swimming pool on the beach. Okay, I'm real. I do these things because I like to give something back. Okay, so if you don't want to listen to me, you want to learn something, read between the lines. Look at what I write about the fundamentals. Look at what I tell you about the technicals. Marry it up and make your own opinion. I'm not here to make you trade like me. I'm here to tell you how to make money in the markets. It's not about being right. It's about being right at the right time. Yeah? These things are very important in trading. Understand yourself and you'll be able to understand the markets, okay? People trade markets. Look for fear. Look for greed, okay? It's really important, guys, again, that you find your own style because people will try and teach you a strategy and style, but it will never be your own. Okay, you have to make it your own. Have I got a view on the euro dollar downside? Yeah, I mean it's down, isn't it? All the major houses, all the major investment guys are saying that we're going to hit parity at 1.0. So you've got Deutsche Bank saying that. How short do you think Deutsche Bank are? They're probably short about 100 million quid here. They're probably short about another 200 million quid here. Maybe a few billion up here. Deutsche Bank UBS, Morgan Stanley, Goldman Sachs. Why do they exist? To make money. If they say they're short on something, it's to make the market go further down. Because that's right, boys and girls, they're already short. Okay, so institutionals, don't release things, when they want to do it. They do it after to make the market move. The indicator here. Okay, I mean, this is just an indicator I've developed. Okay, it's nothing amazing. It looks great because every time it comes up with something, you make money. But this is 14 years of trading and charting. Yeah, red, market's high, sell it. Red, market's high, sell it. Wait for it to go green, buy it. Don't overcomplicate your charts, guys. Don't overcomplicate it. You can just do this absolutely on your own. Okay, this is go back to the weekly, right? Market's gone from the highs here to the lows here. So where could be a point of attraction in the future? 50%, or this higher level here, the 23.6. What else do we need to put on? Okay, indicators that you can use on MT4 are all free. Let's have some RSI. Okay, what else do we need from the RSI? We need to know what the institutional traders think. So that's a tolerance of 80, a low side of 20. Yeah, because all those, people that read books, Google RSI, Google the indicators are looking for 80 and are looking for 20. Sorry, 70 and 30. So what does the institutional traders look for? 20 and 80 to push them. So you look from the weekly chart, potential highs, potential lows, work of the market potentially get on the low side. Well, we don't know, do we? We don't know. We can only go back to the monthly chart and see where it's been in history. That's a low. That's a low. Okay, so what we're starting to look at is the monthly picture. Lots of red. We're going to go lower. Weekly. Had a bit of green. Now we're going red. RSI. Oh dear. That's on 30. All the retail traders are going to think got to be a buying opportunity soon. No, wrong. Daily. Same scenario. Every time we've hit these levels, surprise, surprise, how is that a perfect level of support? Break through it, don't test it back, we go lower. So what we're going to do in the dailies, going to go lower. Going to get to one spot, 0.347. Going to get then below the one parity mark, 0.96100. RSI, not looking quite so good now, is it? Not looking quite so good on the daily. Yeah, we've tried to get above 70 a couple of times, and we haven't. What we're getting down to then is 30 and 20. Yeah, market's looking to be overbought. So that means it's got to go down. Look on the hourlies, same scenario. Lower high, lower high, lower high. What's going to happen here? That's right, lower high. We've bounced off the 30 mark. We haven't got anywhere near the 50 mark, which is the midpoint in the RSI. So until we get to that midpoint, we might get up to these highs here. That's going to get back, break the overbought territory, and continue down to the institutional level of 20. I mean that's it. No, I can't really make trading any more simpler. So what's going to happen in the eurozone to make people buy the euro? Probably Greece leaving, but that'll send the euro down before it goes back up. Simple as that. All right, guys, that's my allotted time today. I hope you've learned something. I'm afraid the Bank of England was a bit of a damp squib. I'm afraid, but what can we do? I can't always make the money live when things don't happen in the markets. This is about discipline now, and understanding there's nothing for me to trade. There's no edge, so I'll stay out of the markets until the US Open. If I see something good, I will then trade. All right, guys. Anything else? You know where to get me. Get me on my FX Street page or sruffley@tradermaker.com. All right, guys. Have a great afternoon. Take it easy.